Watch the 200-day moving average closely for the sign. Yes, indeed, guys, this is going to be the big one here itself. Now, I know that everybody knows what the 200-day moving average is all about, but if you put it together with the fundamentals, then you can see the thing, and that is the sign that we're looking out for. So before we start today's session itself, once again, I apologize for today being so late because I was pretty busy this whole day. All right, let me show you now. But before that itself, disclaimer apply as usual, and thank you Ames for the nice sponsorship. Now, before we go into the market, the pound is the problem now. The thing is this, yesterday I was just telling everybody that I believe that the pound will go into the parity level. So what we saw was Bank of England intervenes to stabilize the UK economy, and we all know that all the intervention by any of the central bank usually ends bad. We saw what happened with the BOJ doing to the yen, and of course now the yen is way high at 144. So what do you think about Bank of England doing this right now? It's just the same thing that happened back in 1992 where they tried to intervene it. Yes, temporary help, but then of course obviously later on George Soros won the game. Look at the chart right now. This is what happened over the last few days. Okay, we saw the pound slam down despite there was a good news on the tax relief. All right, but then the pound just go all the way down and hit the low of 103. Then of course that was where you can see that the government coming to intervene, and of course, wow, look at the way it recovered to the high. So anyone short sell the market itself will be frightened by the government, right? Then of course the market went sideways for 1 day. Okay, and then suddenly yesterday we saw another wave of selling, and again the government comes in and then intervene and bring the price up again. So all the stop loss were all being knocked out. And at the moment right now it's trading at 109 and it's like back to where it came from, right? So of course this is always possible when the government are involved, but again, how long can they do this? And that's the reason why you can see right now, not only I said that, but Bank of America coming in right now and said that there could be a chance that there could be a pound parity, pound dollar parity. So again, I didn't see this news. Okay, I just feel that it was coming in, and now with another bank coming in is quite coincidence, right? Okay, so be careful on this. I tell you guys. So watch out for this right now. 109, 103. So the midway will be 106. So if the market can hold above 106, no problem. But if the market breaks 106, there's a very high chance we could see parity. Okay, so watch out for that. Now let's look at this one here. This is the real rates versus the Fed PEs. Okay, in short itself, the one in black is the forward PE ratio. The one in red is the inverted the 10-year rate. Okay. So you can see right here itself, right, when the 10-year rate basically goes down, or aka increases, all right, okay, in this case itself, we can see that the forward PE ratio goes down, right? And of course, if let's say the yield actually goes the other way around, it means that it's inverted. Just to gently remind you that if it inverted means it go the other way around, which is coming down in a way, and that's where the PE ratio goes up. Okay, so in short itself round, you can see that the PE ratio and the 10-year rate inverted go hand in hand. So what is happening right now is that you can see on the 10-year yield inverted is at this point right now, and the PE ratio is here. So we have a big gap, and of course if that really happened, then of course things can get very drastic for the entire PE ratio, and that's where it gets pretty scary. So for those who can't see the pattern itself, right, it's about central banks seeing it every day, and they vow to make the debt-funded physical overdrive at the time of rising rate and the QT, which is quantitative tightening. The yields are particularly surging right now, and the real yield could go even more. All right. So the question is, if this will continue, right, what can happen is that the PE ratio can go down all the way to 12 times, and that will bring the S&P 500 down to probably 3,002 or even below 3,000 level. Now the MOVE index, which is the move index itself, right, is for the bond volatility movement versus the VX. Now the VX, we all know that is basically a hedge too, so that if the market get too volatile, people do buy VIX, right? So what we saw in 2020 was that the MOVE index was surging, and so did the VIX, right? That was during the pandemic time. But now what we can see is that the MOVE index now is again at the high level back in 2020, but the VIX is hardly moving. So what is wrong with the VIX right now? Is it because that the market is not as bad, or because everybody is too complacent and think that nothing's wrong? So the big question is, how long can the VIX, okay, ignore what's happening in the bond market, okay? Is it going to be a positive divergence, or is just waiting for something very big to happen, and then when that really happens, the VIX will just join the MOV index, which usually you can see that happening. Now the investment grade credit, the LQD, is in a very bad shape right now. The last time we saw this was back in 2020, whereby we know it's a pandemic, right? Then of course the Lehman Brothers crisis is where it was very low back then, and we are now almost near the same level. This is actually pretty scary, because that shows that the market is not in a good position right now, and this is why okay, the big risk is involved. Okay, if this is going to continue, right, this will really go down to the Lehman crisis time, and of course we know that what happened during that period of time. Now, I want to show you now the 200-day moving average is the one that is about today. But before that, let me show you that how beautiful is this 200 MA. Okay, you can see right here itself that every time, as long as the market hit the 200-day moving average, the market will usually rebound. Right? Can you see that? So let's just do some drawing for you. Okay, you can see right now here. Okay, let's just give me the pen. So you can see right here is in 1998, the market did a beautiful recovery. Back in 1991, we saw the same thing again, and back in 1995, we saw something like this. Okay, then we just show you all the positive note. Yeah, first, okay, though this is another strong rally, a strong support rally, right? And that's back in 2012, and it was inch perfect. Okay, back in 2016. 2018, okay, inch perfect. All right, then of course during the pandemic we saw the sell off, and then once the market recover above the 200 MA, that was where to restart, right? Okay, so we saw the positive side. Let's look at the negative side. Okay, the negative side is when it loses it, and that is where things go very, very wrong. Okay, goes very bad. Okay, so I want to bring you now live to the 3 different areas whereby the market loses the MA and what happened during that period of time. So let me just bring it to you now, the chart in. Okay, this is the chart. Okay, let's just zoom in right now slowly. Okay, this is in a weekly form, yeah. Okay. So we're going to study them one by one first now. Okay, let's take a look here. This is the week whereby the moving average, you can see from this side here. Okay, the market back in year 2001, the market on a weekly chart was keep tapping on the 200-day moving average for 3 weeks. Okay, and then once the market loses that as well, right, the market is sold down pretty badly. There's a 1220 down all the way to 1094. So that was down by another 10%. Then after that as well, it tried to recover, climbs back above, but when it loses it again, this time around, it went all the way down from here itself, 1245, all the way down to 950. So another, that's about 20 to 25% drop. Yeah, of course. Then subsequently, throughout the whole entire year itself, the selling was pretty bad. Okay, that's the first example. Then after that, we move to this point here as well, where the market hit the 200-day moving average in 08 during the Lehman crisis. The market staged a strong rebound, okay, but once it loses that again, the market dipped all the way down. You can see that that's terrible, right? But that's during the Lehman crisis, okay. Then of course, if that is the case, we're going to move right into here, whereby you can see how inch perfect it was, show that the market is really, really manipulated in my opinion. And of course, back in the pandemic time, that was how bad it is. It slammed all the way down to the 200 moving average. Okay, then after that it went all the way down to a low. So from this point here, from 2642, it dropped all the way to 2195. Okay, so you can see that once the market loses the MA in the intersection point, usually the market will drop by another 10% over about 2 to 3 weeks. Okay, so what am I trying to say right now? So take a look, guys. We are now very, very, very close to the point whereby the market will test the 200-day moving average, and it's likely about 3600 level. Okay, so let's say we do the same hypothesis. If the market really breaks below 3600 level, 10% will be probably 360, right? So 3600 minus 360, so what we can get is about 32 plus plus, right? So if you look at the chart that I draw back then and so this point, we can see that if the S&P 500 really loses the moving average, there's a good chance that S&P 500 may go down all the way to 3223 level. Okay, so where are we now? We are now actually at 3667 level. Okay, so market has started trading already. So if the market really goes down, right, by 400 points, that means that mathematically we could see the Dow Jones down by at least 3,500 points from where we are right now. So the Dow Jones now is trading at 29,358, right? So if the market do drop by another 3,000 point, wow, that means the Dow could go down all the way to 26,000. And of course, at the moment now, the Dow Jones is actually trading below the moving average of the MA 200. And the last time we see this was back in the pandemic time. And of course, you can see right here itself, it has been the strong support. Every time it hit the moving average, it become a very strong support, right? The last time when this happened was back here itself in 08, whereby the Dow Jones from 11,500 drops all the way down to 6,700. So you can see that it was a 3,000, 4,000 point move. But remember, the time was only 11,000. Yeah. Then you can see a very strong support all the way. And then you can see right here when it loses it itself, from this point was 10,000, it dropped all the way down to 7,000. So it's another 30,000 point. But again, it's a different magnitude because that is 30% drop. All right. At the moment now, we are now way much higher. So a 3,000 point drop is gonna be rather not as crazy because that time 3,000 point drop is 30%. But for now itself, a 3,000 point drop is about 10%. So that's the reason why I felt that it could happen. And you can see the impact now for NASDAQ is even crazier. The NASDAQ is coming in now very close to the moving average right now. If the market loses this, the selling will come. All right. The last time we see this was very long time ago. NASDAQ, see, it's been a very strong support for last 10 over years. But once it loses that itself, right, from 1700, it dropped all the way to 1,000. So that was another 70% drop over here. Okay. So you can get my point now, right? This is actually pretty critical. The 200-day moving average is not a joking matter. All right, so watch out for this. But before you get into the panic mode itself, right, let me tell you something, a good news here. Yeah, good news, yeah? Okay, so what's happening right now is that, do you know that we are down for 5 days in a row and we are down more than average 0.75? Now, this is a very interesting thing because based on statistics, right, if the market down 5 days in a row of more than 0.75, it's actually a pretty bearish signal. Okay, bearish, right? Then what's so good about it? Okay, let me bring you down here now. Apparently, there's this crazy crash pattern, okay, that will way back. Okay, so way back, how back is it? So it seems that, right, since 1932, 1974, 2008, which you can see denoted by the green arrows here. Can you see right now? Okay, these are the 3 times. It seems that every time if the market actually drops for 5 days in a row itself, right, apparently there will be more pain coming in. Okay, more pain coming in. And the best part of this, the average itself is about down another 10%, 12%, which is like the 10% I just said. Crazy, right? But if you take notice of this, after that it's alright. Usually it's a very strong bull market. Can you see now? A very strong bull market that comes after that. Okay? Can you see my point? So what I'm trying to say is this. If history is a good chart pattern, then based on what I've been sharing earlier as well, right, it seems that it's inevitable that we're going to see a 10% drop very soon. Okay? But once this 10% is over, this will be a good time to consider to buy into the market. You understand my point now? Yes, indeed. 10% from where we are right now, it could be a lot of pain, but then after that, it will be a very good time to buy and keep. So that's the reason why I'm telling you this. As much as we have bad stuff going on right now, it could be good, and who knows, you may be rewarded by that as well. So take note of all this important information. Yep. All right. So now let's just look at the chart for tonight. I'm so sorry again that it took us so late of my time of your time, but let's just look at the chart right now and see what can we have. Okay, so first of all, very critical and very important is that, look at it, this is this NASDAQ KFC point. Now yesterday we saw the market trade above my KFC. My KFC level is at 11,369, right? But now it's being breached again, and this is bad because you can see very clearly the market is really selling. So if the market continue to sell, watch out for this. 10,832 is a target level that I mentioned for a few days already. Okay, now China A50, we saw it tries to go back above the 13,000, but interestingly for the last 2 days it went above 13,000, but the market just gave back the profit. Okay, today it closed at 12,974. Right now this is the off the mark. This is the um, non-cash market movement. So what it's trying to say now is that the market is trying to hold above the trend. Okay, the last time we went below, right? But now and then it recovered. So if this is going to hold, that's good, because that means that there could be a chance that the China market is going to recover. But if the market loses again the trend line, then I'm so sorry that we could see all the way down to 12,636 level. So watch out for all these numbers. Yep. Okay. Now the Dow most likely tonight is going to go down further if the market stays below the MLP of 29,445. Okay, my number that I've been sharing is that if the market continue to go down itself, there's a good chance we could see 28,564 range. Okay, now why is that so? If you remember this, I showed you the chart right here. Right, remember I said that if you look at it itself, right, if the market still stays below the 80% level, which is the 29,563 level, then it will likely be coming down to test this figure, and that is 28,639. All right, although we are just about 600 points away, I just kind of believe that it is very possible for the market to reach that point. There's one very big concern right now, as you guys may have known. Okay, wow, look at the market is coming down really, really fast. Okay, now the thing is this: if you remember, I said this to you guys not to buy Apple, right? I've been saying this, and you can see right now why is that so. Okay, you can see right now Apple is coming off. Okay, Apple is coming off, and I told you guys that if the market loses the 152 support level, it will come down to 140 range, and it has happened. Okay, so if you look at it with the Apple chart, right, you can see what's the concern here. Look at this. Although the boys have been buying, you can see my KSI is green, so the boys have been buying, but the KRW is red. So we have a mixed signal here, and usually when this happens itself, that means that even the boys got hit. So this is one concern here, because yesterday the market went up, but Apple came off, and the reason is because I told you about the iPhone 14, right? Apparently they are reducing the production of it. Right, they're reducing it itself, and this is incredible because everybody thought that it would be good, right? But I said to you, I don't think so, and I told you, I shared before that I think that we could see the problem with iPhone 14 is starting fantastic in my opinion. Hence, therefore, if this likelihood will hit the market, and it's all happening right now. And Apple is one of the kingpin stock, right? So if this counter itself is coming down, most likely it will drag the whole Nasdaq down, and we are seeing it right now. As we are seeing live at the moment, you can see the Nasdaq now is coming down heavily, and if this is going to be coming down in this manner, there'll be a single yellow. The last time we saw this, we saw the Nasdaq coming down for a few days. Can you see that? So every time we see a single yellow on my indicator itself, right, that will bring the Nasdaq down. And then if this is going to happen, then Nasdaq could go all the way down to 10,610, and that could be very bad. Okay, S&P 500 for today is also the same thing. If it loses the 3684 right now, the MLP, most likely going to test ground level. 3600 is the support level for now, but once the market loses 3600 level, the next target will be 3463. Okay, now for Hong Kong market, I am still very, very bearish. I already tell you guys not to be very careful on this market, and truth be told, today Hang Seng failed to cross the MLP level at 17,568. It did go above it temporarily, and once it loses that itself, right, no matter what you can tell me as a trader, I said countless of time that once the market loses the MLP, goes below opening price, look at it. Wow, look at how the waterfall came in. The market just crashed all the way down 600 points in just that's 45 bars. That means that it's roughly about 2 to 3 hours, and this is really bad. Okay, and likelihood it may come down to test it again. All right, and now since we are online, we can see some Nikkei movement. Nikkei has continued to fall. It has now I shared with you guys that the Nikkei did recover yesterday, but now it's coming off, and likely it will test back again the support level at 25,905. Now for DAX alone, DAX itself, right, is now coming off, is now below MLP of 12,160, and both my KSI and KX, my KRW and my KSI is in inversion. So that means that there's a lot of buying activity despite, the selling is by the boys. So I suspect that once the moment my KRW turns to red, the selling will bring it down all the way to 11,551 level. Okay. Now oil did a strong recovery last night, very strong recovery. I told you guys about $75 and consider the buy. Yesterday the low was at $76. The last low was at $76 too. So $76 seems to be a very strong support level, and it seems that once the market come here, the market will come back up, right? So the thing is this, I still believe that the oil will come back to 75 level range, and that's where I'm looking for buy. So watch out for this, okay? And last, now we go to the next sector itself is the gold market. Now you can see for gold, you can see very clearly now gold is trying its best, still silver, trying its best to stay afloat. Now silver at $18 is the strong support level, very strong support. And I said before, if you go to now come back to below 17, that will be the great time to buy into silver, yeah? Now for gold itself, right, yesterday we saw the strong recovery because the dollar slipped. Hence, therefore, the market is expecting 1710, but in the fundamental, I still think that gold is going to test back 1566. Okay, I'm still very bearish on gold. I still think that 1566 should be the target for gold in the next few weeks. Okay. Now Bitcoin is coming out right now, and this is not a good sign because we saw Bitcoin went up yesterday before the Nasdaq recovered. So I told my friends and traders, I said, look, most likely the Nasdaq is going to be a buy. And truth be told, right now, if now we're seeing right now is that the Bitcoin is coming down right now, right back to below 19,000. Hence, therefore, very good chance that Nasdaq will also be coming down, and we are seeing it now live. Okay, so Bitcoin, once again, I'm still very bearish. I still believe that we're going to see 16,000 in the next 2 to 3 weeks time. So watch out for that. When it happens, then maybe you can consider to buy into it. Now, the Ethereum is also coming down right now, and it's broke below the 1337 MLP. Hence, therefore, there's a good chance that this Ethereum will come down to 1197 range. Okay, watching out for that area. All right, guys. So that will be all for this evening. Thank you so much for waiting for me until now, and I wish you the best. Just remember this: I believe that we need to see more pain before we can see the bottom. All right, this is Cal signing off. Have a great good evening. Bye bye.